They're calling it a game changer. A 50-year mortgage to fix affordability in the housing market. Lower payments, easier approvals, and more affordable homes. But who really wins and who loses if this 50-year mortgage that Bill Pulte and Trump are trying to push forward? Because, folks, the numbers, the real numbers, are shocking. Absolutely shocking. Hey, if you're new to my channel, welcome. My name is Jason Ferrier. Good morning from snowy Ohio. This is my morning housing crash, housing bubble update, and it's a doozy today, folks. I'm not a I'm a realtor. I'm an investor in Central Ohio. I'm not a financial advisor. And I'm going to give you this data. I'm going to show you what's happening behind the scenes in the housing market. And then it's up to you to make the decision on what you do. But check out these numbers. This is absolutely insane. On a $300,000 house, which, by the way, you're not going to find many $300,000 houses in the U.S., the median home price is about $380,000. But nonetheless, in Ohio, if you found a $300,000 house, if you took out a 30-year mortgage, just principal and interest only, the payment is $1,798 at a 6% interest rate. If you pay over the 30 years of the loan, that is a total of $647,000 in payments. $347,000 of that is interest. Now, what happens if I go to a 50-year loan, as Trump and Pulte are trying to promote? Well, good question. My payment then drops to $1,579. Basically a $200 a month savings. But this is where the rubber meets the road, because you make a total of $947,000 in payments, nearly $1 million over a half century of debt payment. And you pay a staggering $647,000 in interest. Is that going to fix home affordability? So who really wins and who really loses in this proposal? I guess I'll call it a proposal. Well, the first winner I thought of are the banks. The banks collect another 20 years in interest, folks. Another 20 years in interest. So the banks are cashing in. Home builders win, because home builders know they can buy down the rate, and make no mistake, they will buy down the rate and use that 50-year mortgage to get payments lower. Remember, higher for longer asset prices with lower interest rates is what they want. And that's what they're trying to get. Who else wins? Current homeowners who already own a house today, who have 30-year mortgages. Because what happens if 30-year mortgages are a thing of the past? Like coming up, like in a year, maybe next year. Who knows if they get it through? But if they do get this 50-year mortgage thing through, people who have 30-year mortgages will be like people now with 15-year mortgages. Cha-ching, cha-ching. They'll be cashing in. Investors win. Why? Well, I don't know any of the details as far as owner occupancy goes, but if it's just the standard Fannie and Freddie backed loans that are getting these 50-year treatments, you can better believe that investors will load even more into the housing market. Why? Because a 50-year loan decreases my payment by $200, and that's $200 more in cash flow. That's also, by the way, more that I can pay for that property and still cash flow. So investors win. Current asset or property owners win in a big way, not only because they're paying down their debt more than new people buying 50-year mortgages or buying houses with 50-year mortgages, but they also can refi. They can refi their properties, maybe depending on what program it is or what the program looks like. They could refi into 50-year loans. Just imagine refining into 50-year loans. There's something like $17 trillion in equity sitting out there right now in residential real estate. Could they unlock $17 trillion or more into the economy? Now, make no mistake, many of the people that will use a 50-year refi will probably spend the money foolishly, right? They'll buy a boat, they'll buy a side-by-side, they'll buy a motorcycle, they'll take a vacation to Disneyland for $10,000. They will put in a pool, or they'll just blow the money on stupid items. Some people will invest it, but few will. Nonetheless, the economy will grow. House hackers win. Because imagine if you're a house hacker and you want to buy a duplex, move into one side and rent out the other, and you can get a 50-year loan. That cash flow helps significantly. I mean, that's another $200 a month in cash flow you could be getting on a $300,000 house. And the one that nobody will talk about are the counties and the cities with taxes, particularly property taxes. The counties, the school districts will win big time because, make no mistake, the value of real estate, the prices of houses will go up if this 50-year mortgage goes into effect. Why? Because people will be able to qualify for more home. Just insanity. And so the counties and the cities will collect more in property taxes because the valuations will go higher. And I know there are efforts to remove property taxes, but I want you to ask yourself if you've seen any plans to eliminate property taxes on the federal level. I haven't. So far, it's only extend higher, assets higher, prices higher, not lower, not deflation, inflation. Continued assets higher for longer, rates lower for longer, payments lower for longer. So who really loses with all this? Those are the winners that I came up with. I'm sure there are more. Let me know if you have any more. Well, who loses? Well, it's easy to see the first-time home buyer loses and loses big time because they will get trapped in a half century of mortgage payments. I mean, just think about this. This is so comical. Like it's so ridiculous. It's so like it's completely the opposite of what all of you have told me you want. Like the median age to buy a home now is 40 years old. 40 years old. I get a 50-year loan when I'm 40. I'm 90 when I pay that thing off. I'm 90. Obviously, foolish. And if you give consumers the opportunity to spend, they will spend. Buy now, pay forever. No longer is it buy now, pay later. Buy now, pay forever. Forever, forever. So first-time buyers get trapped into this half century of debacle that they're going to pay and pay and pay. And just think about what happens if they have a job change in the first 10 years of a 50-year mortgage. Even if they got a 40-year mortgage to go through, and the administration said, you know what, we're going to put a 40-year mortgage in instead. Not as bad as a 50. Oh, okay. But just imagine in those first 10 years if they have to move, get a job change. And by the way, the down payment on a lot of these loans is near zero. We're talking 1, 2, 3.5%, 5%. Who cares what it is really, unless you're making a 50% down payment. Like in that first 10 years, you will have zero equity. And this right here is infuriating. It should anger you. This is a quote from Bill Pulte when it comes to equity. This was right below the post when they talk about 50-year mortgages on Twitter, ex-Twitter. This is what he says from Bill Pulte, the leader of affordable housing in the U.S. Equity being built in a home is the central part of home ownership. This is a direct quote. We need to return to building one's equity in their home. Now, I don't know if he actually wrote that tweet or some nefarious actor came in and took his phone from him in the middle of the night and wrote it. I can only assume that because one post you say equity being built is in the home is the central part of home ownership. We need to return to building one's equity in their home, exclamation mark. So we're coming out with a 50-year loan, so you have no equity. Okay, all right. So first-time home buyers lose, and lose royally. The other folks that lose are the offspring of those who inherit those 50-year mortgages. Flash forward another, I don't know, 50 years from now, and you've got a bunch of people that bought 50-year loans, 50-year mortgages in their properties, and then they decide, you know what? Time's up. Time for me to leave this earth. I'm going to leave it to my son. Hey, son, I've left you this awesome house I worked my rear end off for. I've paid on it now 20 years. Unfortunately, you owe more than the house is worth. Here you go. Congratulations. So people inheriting homes lose big time. That generational wealth idea from home ownership is ruined at that point. The other folks that lose are really the middle class. Because the price growth, in my opinion, will outpace the payment savings. And what does that mean? Well, quite frankly, it means that if you have a mortgage that the payment is now $200 less, congratulations. However, the price of that home now has gone up, who knows, 50%, 100%, hard to tell. But now that payment is even higher for that next buyer. And it's very possible that when you run these numbers, and you can go to, you can Google mortgage calculator, mortgage amortization calculator, and it's free. You can go online and look at this and type in the numbers yourself. But it's possible that the bubble gets bigger because the interest you pay could be more than the house is actually worth. Not the principal. I'm talking just the interest. In short, folks, I think that the top 20% win. And I think mom and pop lose, trapped in a half century of debt. It's almost as if the people in charge own a bunch of real estate. Huh? Imagine that. It's almost like the people in charge are invested in real estate and they want to create things to keep real estate higher for longer. Kick the can down the road, extend and pretend. And I get comments on my channel that say, hey, housing nerd, they're not going to kick the can this time. It's been kicked too far already. Never underestimate one's ability to continue the grift. And it doesn't mean that you have to be trapped in this. And we're going to talk about that in a minute. But really, what do you think about this? Because I saw it come through yesterday evening, was not surprised to see it. I knew something like this was going to come. Some way to get more people to buy homes, regardless if they qualify, because the 10-year treasury is not going in the direction they want it to go. Mortgage rates are stubborn right now. They're like a mule. They ain't moving. They ain't moving. And the powers that be don't like that. They want interest rates lower. They want 10-year treasuries lower. Why? Because mortgage rates need to be lower, so more people load into the housing market and prices continue to go up. So will this fix affordability? Who wins and who loses? I'd like to hear from you. The longer that you stretch these payments, the longer you stretch out these payments, the more the system wins. That's the bottom line of all this. The longer you stretch out these debt payments, whether you're buying a burger at McDonald's and you're using buy now, pay later, or whether you're using a 50-year mortgage, the longer you extend the payments, the more the system wins. It's just how it is. And I think it's worth understanding how this can affect you. I think prices will go up on homes, but you don't have to fall for this. You don't have to if they have a 50-year mortgage product, don't buy into the BS unless you're an investor and it makes sense to do, because it could. But if you're a Johnny homeowner, mom and pop homeowner, don't fall for a 50-year mortgage. Don't fall for it. Really think about what you're doing. I mean, 50 years. I mean, I feel old today, and I'm not 50 years old yet. 50 years is a long time. Nuts. And then you lump the 2K stimulus check on top of it. And it turns from a comic relief into absolute slapstick, roll on the floor comedy. But you don't have to buy into any of this. You can make extra payments on a mortgage. You can get a 15-year mortgage. You can put 50% down. You can buy a home that is affordable, but not one that is Instagram worthy. Or you can just keep renting, which is fine too. Sometimes renting is better. Sometimes it's not. All depends on you. Let me look at some comments. I got 18 people on. Hit the like button for me, please. All right, John, you were on earlier. Thanks, man. John Doe, for this to happen, changes to mortgage regulations would be necessary. That's true. And lenders would need to be willing to offer the product likely at a higher interest rate. Possibly. Although, now that would be paradoxical, right? If the administration was like, we've got this 50-year mortgage through. Unfortunately, rates are higher, so it makes it doesn't help anybody. Oops. But you're right. John's right. They would have to change the law, because right now under Dodd-Frank, 30-year mortgage is the way it is. You can't go to 50 years. But again, I'm not putting anything past them that they couldn't push through. 50-year mortgage is very possible. Very possible. I'm here for the doozy. You got the doozy, Coors Light. You're going to need 10 or 15 of those today to handle this kind of doozy. Unbelievable, right? Christine Zimmerman, how are you? Criminal to let people shorter terms with lower rates would help families. 15 years so people can save money for retirement. Yeah, like I just ran the numbers on a 20-year loan versus a 30-year for a refi and a purchase actually on an investment property. And I was shocked. Like I'm always shocked by this, but the 20-year to 30-year isn't that big of a difference. I mean, there's a difference there in payment, but it pays it off so much quicker. So you're right, Christine. That's if they allow people to refi into a 50. Has that been confirmed yet? No, it has not. No, it is not. I'm just saying, look, nobody at the beginning of the year would most people think that it would happen, a 50-year mortgage? No. But now they're floating the idea, right? At the same time saying we need to build home equity. So I don't put anything past them. I would think that if the product's out there and it's an actual like real mortgage product, I would think people can refi into it, which would be insane, right? Insane. The Consumer Financial Protection Bureau's qualified mortgage rule sets a maximum loan of 30 years. You're right. Making a 50-year mortgage is non-QM. That's true, but they'll just change that because remember, John Doe, they changed. And I got this from Real Estate Mindset. You should watch his channel. He talks about, first off, the Consumer Financial Protection Bureau has been gutted, right? Because it's no good. So we don't need them, according to a lot of the people upstairs. We don't really need them, right? So that's been gutted. And they changed the qualifications during COVID for the debt to income ratio and credit scores you could qualify for. They've lowered them. So all these rules mean nothing when they just want to change them to keep the bubble higher for longer. That's how I look at it. So I don't think, I mean, this is the way it is now, but that's what they're trying to change and work on. So they would make it a QM product, I imagine. They want everybody to participate. They want all the banks to get rich off this, right? Also, they will allow non-owner occupied to qualify for a 50-year. I have no idea. I don't know, but pretend they don't, which would be a good thing, right? We don't want investors qualifying for this. But right now, investors can qualify for a 30-year mortgage that's backed by the U.S. government. 85% of all loans are backed by the U.S. government, according to Melody Wright. 85%. Meaning, all of these loans backed by the government, 50-year loans backed by the government, default, no worries. We got you. We got you. And that's going to, well, quite frankly, allow a lot of people to make stupid decisions. The consumer's stupid. The consumer is stupid. That's why we're in this buy now, pay later mess. That's why people have $1,000 payments on trucks when they live in a $50,000 house. Dumb consumers. If anything, they're predictable. At least they're that. Frustrating. Very frustrating. 50-year mortgages will only benefit banks, local, and federal governments, not the people. Exactly. Is that a Skyline in your picture? I think it is. Skyline GTR? Maybe not. Could be a Mustang. I don't know. Hard for me to see. But you're right, RR. That is, that's exactly right. It'll benefit banks. And they're already like deregulating banks, right? So you have to take care of yourself. Like if you haven't learned anything at all over the past year, you had to have learned that asset holders win. Asset holders win. Because the people who at the top all own assets. All their friends own assets. I heard somebody say recently that Bill Pulte, I couldn't believe they said this. I heard someone recently talk about Bill Pulte, the head of FHFA, and they made it sound like he was different than others. And he wasn't going to try to inflate home prices or keep prices higher. And they're putting guardrails around this system so that people can't get into trouble. And there's going to be true price discovery. Does anything that you've seen over the last 24 hours tell you they want price discovery? Here's $2,000. And by the way, you can get a $50,000 loan or 50-year loan. $2,000 in a 50-year loan. I don't know. Nuts, right? Jason braving the 30-degree temps. Yeah, it's not that bad today. But I used to do a lot more lives outside. I'm going to keep doing this because I kind of like it. Without the charts and the screen share and all that jazz. So more of an informal discussion. Good morning, Annie. How are you? Good morning. Got the coffee there. Cool. I'm betting it starts with new builds only. So builders and banks will benefit the most. Then everyone else will cry it's unfair and be allowed to refinance. Yeah, the other thing, you're right, Annie. The other thing I'm seeing from the administration on builders is there was a couple, and I don't use Twitter a lot. I'm on Twitter like every once in a while I'll post, but rarely. I haven't really done much with it. And so I just started looking at Bill Pulte's post, and one of his posts, or a lot of his posts, had to do with empty lots and builders. We need to get builders building more. We need more, builders putting houses on empty lots. I'm not going to argue with that because the housing stock in the U.S. is old, really old. I mean, the median age of a house in the U.S. is like 40 years old. So we need more new homes, regardless of what you hear from other YouTubers. Like they're on another planet. Like our housing stock is old. Now, there are markets that are oversupplied, but I agree with you. I think builders will win big time. Big time. Oh, yeah, they'll win. And guess who's in charge of FHFA? Bill Pulte, who's one of the largest home builders in the U.S. Oh, it's Pulte. Oh, imagine that. Is that a coincidence? It could be. I can tell you're a little emotional about this topic. Let's see the facts first. That's if the policy even moves forward. I'm emotional because you're right. I am emotional about it. I think it's even if it doesn't go through, it's buffoonery to float it across to the populace. It doesn't help anybody. Even if it doesn't happen, it's even worse. It's like, why even bring it up? And what's really scary, Coors Light, is that these are the ideas they have. I mean, like I always think, when I think of like the people in charge, like behind the scenes, I think of people in lab coats with calculators and spreadsheets and, learning computers like a HAL 9000 and a Joshua from War Games, if you remember what that is. And they're like these thinking machines that just come up with these ideas that you're like, wow, that's amazing. Like we would never come up with that. And now this is the idea that's put out, and they actually put this out on social media. So you think, even if it's just a ploy, that's the idea you have? Because time's ticking. People want affordable houses. And the real solutions take a long time to materialize. But they don't want to talk about that. That's why it's frustrating. Mortgage nerd, where are you when we need you? Yeah, no kidding, mortgage nerd. Where are you? Yeah, I'd like to hear his opinion on it. How many banks will be willing to take on that kind of massive risk? Well, remember, 85% of all residential loans are backed by the faith of the U.S. government, according to Melody Wright. So what does that mean? It means that if you're a bank, I make the loan, the person defaults, government's got me. It's all good. That's why they lowered the credit scores and banks kept loaning. And really, they're not really banks. They're really the non-banks, right? Like Rocket Mortgage, Union Mortgage, those like companies that basically originate the mortgage, and then the government basically gets that, buys that debt. So yeah, it's not great. It's not a great situation. Trump, I love you, but real estate prices need to come way down. Really. This, I don't want to get political about it, but this, I think, I feel for you, Tom. I do, because I think there's a lot of people in your situation where it's like a leaky roof, right? you're like, yeah, everything's good. Like, I like that. Like, I like my house. And then you see the leaky roof and you're like, oh man, and you kind of like put it away for a second. Like, I don't want to look at that leaky roof right now. Eventually it starts coming to the point that you're like, I gotta call a spade a spade. I don't know. It's, I do feel for you because, I think there's a lot of folks out there on both sides of the aisle that are like, what in the world? And I think there's a lot of people on one side of the aisle that are like, uh-oh, where are these lower home prices? Where's all this building on federal land? Which, by the way, I don't understand either, but that's another topic. But where are all these, affordable houses? No one is talking about lower home prices. Everyone is talking about higher asset prices, lower payments. It's just ridiculous. And that's our economy, right? Fiat currency, Cantillon effect. Those closest to the money will benefit. Those furthest from the money will not benefit and will lose. And we'll end up in debt slavery. Hey, got a super chat. What's up? What's up, Charles? Whoops. Sorry, wrong one. Whoops. Where's Charles? Ah, here it is. Hey, Charles, thank you. No question, no comment. That's cool, though. Hope you're doing well up there, man. Hope you're doing well. And thank you so much. Seriously, it means a lot. A 100-year-old house could be worthless in another 50 years if a homeowner fails to maintain it. That's a great point. I didn't have that on my list, really, but that's a great point. I mean, homes are old. So imagine there are homes right now that are 125 years old in Ohio that I own as a rental. They're already 125 years old. In another 50 years, so not for me necessarily, but if somebody, a first-time home buyer, buys an old home that's been flipped in the city of Columbus, which happens all the time, investors come in, buy a home for $20,000, $50,000 that was built in 1900 that needs everything. They gut the thing, they rehab it 100%. Even if it's rehabbed to a good level, like they have permits pulled, all the work's done professionally, by the time that mortgage is paid off, that home's going to be 175 years old. Yikes. Yikes. E.T. Blackbeard, what's up? More interest money for the banks? Absolutely. Does this do anything for affordability or adding more money to the bank's bonuses? Love my 20-year mortgage so much right now. I'm sure you do. Yeah, I don't think it doesn't do anything for affordability. Like it will at first, right? Like at the onset, it's like anything else, any other stimulus. On the onset, it's like, yay, look at my savings. But then what happens? Pigeons come home to roost and prices would go up because people could qualify for more home. I mean, imagine like what's going to happen, because this is how consumers act. Somebody's going to go into a bank and say, or a lender, and say, how much do I qualify for? And they're going to go, well, Jason or E.T. Blackbeard, hey, you qualify for, a $500,000 house, and here's the payment. But if you get a 50-year loan, your payment goes to this level. It's $300 less, and you can buy this much house, 575 grand. And then he comes home and says, hey, babe, we don't have to live in this neighborhood. We can go to that neighborhood. We can live with the big boys over here. And so then they extend themselves to that level and affordability vanishes because now they can afford to pay 575, or they can afford to outbid the other person over here in the $500,000 range. That's what I see happening. Here's the fact. If they allow decent paying middle-class jobs to move to other countries over the decades, now with AI in the middle class will not be able to get a mortgage in the near future. It's possible, but again, they're going to do anything they can do to put people into a position to spend more money so they make more money and they're reelected, whoever they are. Like, it doesn't matter who's in the White House. It does not matter. They will cajole, they will interfere, they will intervene to make it so that asset prices go up. And we're in the economy where asset prices have to go up. Inflation has to remain. This whole idea of like deflation, where is it? I'm looking, where is it? Where's the deflation? There's no deflation. That's That's like that's a pipe dream, I think. And I agree with you. This is I apologize for my emotional context this morning, but it's I'm just a normal person. I'm just like I don't have a huge team. I don't have, billions of dollars. I'm just like a entrepreneur trying to make it. That's really all I'm doing. And trying to help people along the way. And it's you see something like this and you got to just kind of wonder what in the world? But the good news is, and how I look at it is, at least we can all talk and make sure some of us are aware that that would be a debt trap you would never wish on your worst enemy. Yes, because extended terms doesn't ruin the overall market. Look at car prices. Exactly. Exactly right. Yeah. Look, you remember when car prices were supposed to crash, right? Car prices are going to crash next week. Lots can't sell their cars. Oops. Now car prices are through the roof still. It's more expensive than ever to buy a car. And people are buying six-figure cars like they used to be like $50,000 cars. I mean, I think about we bought an SUV and I think about the price I paid for the SUV and it was under 50 grand. And I think, man, I spent a lot on that car. But in reality, I didn't. Because you can't get anything anymore under 50 grand. It's like super nice. But I also have a car that was $12,000. But it's it's crazy. Car payments are crazy. Yep, you certainly did there, Travis. You heard me. Yeah, I was talking about you and when did I reference you? I think we were talking about amortization on loans, I believe. And I was talking about Melody when I said that 85% of the 85% of the loans are backed by the government. Yeah, I listened to your video today with Mitch. Since you're listening to this, I would love you to actually corner Mitch about the policies that are going on right now. I mean, he looks stunned this morning, but I would love it if you could actually get him to admit that, man, this kicking the can down the road, it doesn't matter who's up there in the White House, brother. Maybe he'll admit that one day. You know him better than me, but he weasels out of those questions like a prize fighter. He's like duck, dodge, dive, and weave. And you keep throwing at him, but maybe you could pin him down a little harder. Yep. Good morning, Travis. They removed DTI completely from QM because around 1 million loans were over the DTI qualified mortgage threshold. My bad. It's getting cold out here. They removed DTI completely from QM. Yeah. Yeah, exactly right. What Travis is saying is that they changed the rules on people. They changed the debt to income ratios to allow you more people to qualify for more bad loans. It's like, hey, you guys aren't in over your head enough yet. Let me kick you in there a little bit further. They're playing us like a heart from hell is really what they're doing. Bankers and politicians will do anything to avoid accountability. We need FHA loans to collapse. All these mortgage rewrites and ways to prevent foreclosures is making the data fraudulent. We need FHA loans to collapse. Yes, I understand what you're saying. They won't, though, because the government will just bail them out. They won't. All these mortgage rewrites and ways to prevent foreclosures is making data fraudulent. Yeah, I understand. They don't want anything to go down. It'd be completely counterproductive to what they get up in the morning and do. Again, Bill Pulte is a Pulte. Do you think he comes like it's almost Thanksgiving? Do you think on Thanksgiving Pulte arrives for Thanksgiving dinner and the other Pultes are around the Thanksgiving table in their $50 million home and they go, hey, I'm glad you're doing some stuff. I'm glad you're putting policies together to help affordable housing and reduce home prices. No, they're giving each other high fives because now more people can buy more houses and number go up and price discovery is gone. Gone. And they're happy. The person in charge of affordable housing is a home builder. Just saying. Whoops. My wife and I have zero DTI. We work for that and means squat for being financially responsible. Agreed. Agreed. Jeepers creepers. With a 50-year mortgage and only 10 years of ownership, most payments cover interest, leaving little equity. You're basically renting from the bank. You definitely are renting from the bank at that point. I mean, imagine, so here's what will probably happen, right? Think about this. There'll be a bunch of people who take out 50-year mortgages. In 10 years, they got to move, or they got a job change, or they get a divorce. So they put their house on the market, they go to sell it, and realize, shockingly, that they have zero equity. Heaven forbid if home prices actually fell. Then what do you think would happen? People would cry that they didn't know, they were taken advantage of, and then someone will come in and bail them out. The government will be like, it's okay. It's exactly what they're doing with student loans again. No one is mentioning that. That's flying under the radar, but they're forgiving a bunch of student loans now to try to get them in before the end of the year so these folks don't have to pay taxes on the forgiveness. So they're kicking the can on that too. That's why I haven't seen much in the economy when it comes to the demise of the economy from student loan borrowers. They're not going to let that happen. Even Melody Wright said that. She was like, before anything happens with any of this, they're going to bail out. They're not going to let it get that bad. I think even Travis has said that because it's true. Remember what Denny Green said from the Cardinals? They are who we thought they were. Not surprising. Ohio is pretty much the exact opposite trends as my home state in Texas. It's important to understand the bifurcation, but using the math to find a good deal works in every market. Agreed with that. Yeah, I don't agree with a lot of what you and Mitch have to say about the housing market, and definitely Melody Wright. But I respect what, I do respect her knowledge, and I respect Melody's knowledge, and I respect Mitch's knowledge. The Ohio and Texas market are definitely different. And it's shockingly that it's more expensive in Columbus now, and to buy a home than it is in Texas in a lot of places. It's crazy, but completely different markets. I just did a big review on Ohio. I always do, and it's the prices here just keep going. There are areas where they're falling, but not many. So it's bad. There are counties and zip codes I reviewed yesterday, or I'm sorry, last week, where we have fewer homes on the market than we did last year. Believe that. Fewer homes than last year. Forget 2019. It's nuts. In Michigan, people that overpay for homes in the pandemic that are causing part of the crash now are the same people paying for houses at the top of the market with higher rates. Doom loop. Yep, exactly. Yeah. If they really wanted to do right by the people, Charles, and thank you for the super chat, by the way, you need a long-term fix. You need regulations to come down where they're building so it doesn't cost $100,000 to put in the utilities and to get the permits going for a small little single-family house. I know builders personally that are trying to buy small lots in the inner city, in the little towns of Ohio, trying to buy small lots. They can buy them for nothing, $3,000, $5,000. But by the time they finish the house, there's no profit because of the regulations and the permits. So they need real affordable housing, but that's a long-term thing. It's not overnight, and that's not going to get you elected. Doesn't matter who's trying to get elected. It's definitely a doom loop. I feel for a lot of home buyers that are out there right now struggling to buy their first house, and they're like, what in the world? And a lot of them will fall for this trap, this debt trap. My wife and I are looking for a home in Arizona, and it's the same story. Other part are people who cash out or HELOC for funds. They have to get asking to pay off debt. Yeah. Yeah. It costs 8% to sell a home, right? Approximately. Even if you don't use a realtor, it's going to cost you something. And it costs money to refi. Maybe that's what they're after. Maybe the administration's really after that. Maybe they're like, we don't care if people buy homes. But what we do care about is people pull that equity out and dump it back into the economy. Who knows? Lisa Davis from Kingman, Arizona. Hey, if you're in the Kingman market or Lake Havasu market, Lisa is there to help you in real estate. It's good to see you, Lisa. Well, it's cold here. I bet it's warm there. Don't understand why buyers are so upset. Nobody's forcing anyone into a 50-year loan. How about put more money down? I agree with that. You're 100% accurate. 100%. YouTube, 100%. Yeah. It's not about being, well, I guess they're probably upset because they all know that prices are going to go up from it. Unless nobody takes advantage of it. That would be different, right? Like maybe it's got like rules around it that make it so you don't even want to use it. Okay, well, or nobody qualifies, which I doubt they'll do that. But if they do put it through, prices will go up, and then that's why buyers are upset, because they're like, well, now I'm going to be forced to use a 50-year mortgage to qualify for a home if I can't afford it. And again, most buyers are stupid. When they buy a home, they just are. So it'll be bad. Prices will go up. Yes, they will. Michael, how are you? With the quality of new builds, I don't think they even last 50 years. That's a great question. One of the things I've noticed about old homes, because I work on them a lot. That's all I own are old homes. The newest rental property I own was built in 1940. That's new. If I see 1950 or over on a rental or an opportunity, I'm like, wow, that's new. But most of my stuff is early 1900s, some before 1900, some like 1890. The wood in those houses is old and it's hard. It's like petrified. It's like indestructible because it's old wood, right? That's been around for eons. But the new wood they're using is softer. Now there's good wood too, but you pay a premium for that. So that's a great question. Will these D.R. Horton homes be around in 50 years? I don't know. Yep, you get it, Travis. It was a great live. I didn't mean to be on this long, but okay. How do I get one of them bailouts? Scratching neck like a drug addict. That's hilarious. If I could do a reverse super chat, I would. That's funny. How do I get one of them bailouts? Right. Like a tweaker, right? Yeah. Well, if it's anything like COVID bailouts, you know what they'll do? On the extend and pretend mortgage loan extensions they've done, then they'll just, which by the way, those ended October 1st, I guess. They'll just send them to you. They'll send you the bailout without even asking. Like I remember during COVID when during COVID, I would get text messages from my bank, even on investment properties, saying can't make your mortgage payment affected by COVID. Click here for relief options. And it was just like a text message, like exchange you could do. So I think they'll just send you the bailout. You won't have to even ask for it. It is kind of like a drug though, right? Like it really is. If you think about it, it's a great analogy. It's like the ultimate drug. It's like, what's that band back in the day? Ministry. Just one fix, right? Good snowboarding music though. Oh, you're welcome, Lisa. Karina Scott. Yep. You got your docs in there, right? Great discussion, guys. Listen, thank you for the interaction. Thanks for the comments. I wrote something down at the end of this today that I thought was kind of It fits this situation, a lot of situations we're in with the housing market. It's from a philosopher, I guess he is, Thomas Sowell. If you haven't had a chance to read Thomas Sowell's work, he says there's no solutions, only trade-offs. And I believe that's the case. There are no real solutions. There are just trade-offs. There's pain at some point. Somebody's going to win and somebody's going to lose. You just got to make a decision. Who's that going to be? The system or you? I'm the housing nerd talking about the housing market, and I'm out.